Hello and welcome to my next War and Markets review. Well, first of all, thank you to everybody the feedback. Some have been complaining about a lag between the voice and my video, and some have been saying that sound is still less. So, though I got a new microphone, initially it was okay. Then I today have tried to fix the problem. I think I've been connecting to Bluetooth, and I read up that Bluetooth causes a lot of compression and lag. So today I've disabled the Bluetooth, and I would appreciate your feedback on how the volume is and whether there's a lag or not between my voice and the video picture. Right? Thank you. And today's market was a very flattish market. To say the Nifty was again like yesterday up only about 17 basis points. The mid cap and the micro cap did fairly well, raising about 0.5%, and the small cap was reasonably flat with only 5 basis points. The advance decline ratio was flat today. Both were around 1400 odd advances and declines. So if you look at the pattern during the day, the market started off in the negative and ended up, positive. So across all these indices, the same behavior. So, and then when you look at the flows and you see that FIS sold about 1600 crores today, DIS bought about 2000 crores today. So it looks like the FIS sold in the morning and the DIS bought later in the evening. I mean, it's hard to correctly say this, but because the advance decline was fairly even, the broad-based buying would have stepped in because almost every index ended up on the kind of a day's high. What are the triggers for this? The FIS selling, of course, you don't need any new triggers unless there is a solution to the war. But there was a marginal easing of the Brent crude today to 110 to 105. And that's because of, I think, what Mr. Trump has said that some nations have asked him to hold off on the strikes. And he's given a 3-day window of whatever for next coming Thursday, Friday, Saturday, if you take action. So a little bit of easing on the Brent crude. It also led to a little bit of easing of the dollar index and also the US interest rates, which came down to 4.59%. But all this is at the margin. It's not changed the FI's outlook towards the country. But what they sold and what they bought has an implication. And that's where one interesting fact I want to point out today that the rupee weakened today further to 96.83. In fact, we're almost touching 97 and RBI intervened. But that was the spot intervention by the RBI to control the current prices. But what was interesting today was RBI, partly because domestic liquidity was getting a bit tight. They wanted to infuse some liquidity. At the same time, they want to control the future of the rupee. So they have announced, I think for the 26th of May, a buy-sell swap of dollar. Now this is a little bit complicated, so let me take a minute to explain it to you. So $5 billion worth, RBI says that they will buy dollars today, and if they buy dollars, they will sell rupees. So rupees goes into the system. So this buy-sell swap of dollar rupee, it actually doesn't do anything to the spot rate of the rupee. So the spot actually weakened today, right? But it injects liquidity into the domestic economy. So clearly we have seen credit growth rising faster than deposits. So a little bit of short-term pressure may be there on liquidity. RBI has used this to inflate. But there is another purpose to this swap. So if they are buying it today and they're selling rupees, 3 years later or whatever time frame later when they have that at home, they will sell the dollars and suck out liquidity from the rupee, right? So when they're selling the dollars in the future, it means that there's a supply of dollars in the future, so the forward rates tend to come down, which is exactly what has happened today. Yesterday, if you remember, I had said that 1 year later the rupee was looking at like at 100 crossing. Today, the 1 year rate, the rupee is looking only at a 98 odd, which means from the premium, the swap points premium, which was yesterday, from 390 basis points yesterday, it collapsed to 160. So the rupee forward 1 year now is only looking at about 98 odd. So what this has done is that the forward premium, so when that comes down, which means the extent of depreciation expected over the next 1 year has come down because RBI is going to be supplying dollars in the future. So what they have done is they also control, because when that happens, importers who are fearing a rising rupee dollar rate will try to hedge it, right? And that will create pressure on the currency market. So RBI in a roundabout way is as they're basically hinting at that the importers don't need to go and hedge it because that's all. And it's worked on the swap market. So the forward premium. So why I'm pointing this out is in a day when the rupee depreciated 29 basis points, the export-oriented sectors like IT and pharma were underperformers today. So that is what puzzled me. And when we go down this road of analysis and understanding what's happened, so clearly because the forward premium have come down, there's no pressure to buy IT. So the typical thing of IT, what 3 days a good run in IT, which created about 8% alpha or generating up returns. Today, IT corrected again. So very interesting set of observations. I thought I'll share that with you. Otherwise, it's just the usual domestic factors today don't seem to have played a much a part in this. And the best performing sectors were oil and gas and to some extent auto defense. So the domestic buying, we saw the advance decline ratio about 1400 stock rising was concentrated around these sectors which have been correcting. So some amount of value buying has stepped in there. And oil and gas, of course, because probably today the refiners, because they saw $5 drop in the Brent crude, maybe the refiners got a bit of a uptick today. So interesting days in the market this way, but don't expect any major change tomorrow. The same FI selling, the same DI buying. If FI step up their selling tomorrow for any negative news, DIs will also step up their buying. So I don't expect the market to move very strongly. It will be plus or minus at the max 50 basis points to 1% across the major indices. So strategy for investing continues the same what I'm saying every day. Staggered, diversified, small amounts. Thank you and look forward to meeting you tomorrow. Do give me feedback on the audio today. I would be appreciate that. It will help me to correct it further or improve it better. Thanks.